Hey, this is Justin with DayTradeTheMarkets.com, and in this video I'm going to talk about what we believe is the biggest and most common mistake that most traders make when it comes to trade entry. And by the way, this very concept was one of the absolute biggest turning points in my personal trading career. I was certainly hard-headed, and it took me a while to grasp this concept, but when I finally did, that's when things really changed and took off. And in fact, I would actually go as far as to say that until you really own this idea and this concept and use it and put it into practice on a daily basis, you're going to have a hard time making a living as a trader. So to do this and to make this point, I want to start by analyzing how most traders think about trade entry, and then I want to talk about why it's so difficult to make it work that way, and then I want to talk about a really subtle shift in thinking that you can make, and this is something that we're constantly talking about and teaching with our members that is really going to lead to a major shift in both your confidence level and in your results. So let's start by analyzing how most traders think about trade entry, and I'm guessing that just about everyone here can probably relate to this. I know that I sure can. I literally spent 3 or 4 years, 3 or 4 very painful years, by the way, and blew out 3 or 4 accounts, in this pattern. What I'd do is I'd go on this quest for an amazing setup or series of setups, and I tried so hard to find the right settings on so many indicators, or to find just the right combination of indicators. I even bought a bunch of stuff from people who told me that they had the quote-unquote answer, and I was desperate, so I bought into the hype. But what ended up happening every single time is, I'd have my answer, right? And I'd even back test it. It would look so promising. I'd be so excited, but then I'd put it to use live, and guess what? It didn't hold up. It'd work at times, not at others, and I just got so confused, so frustrated, so angry. But then what would I do? I'd repeat the same pattern over and over again, and hoping that this time was it, right? So, for a lot of people, that pattern ends their trading career, or maybe they try it twice, and at that time it ends their trading career. I actually consider myself pretty lucky personally because number one, I was really committed to this, and I was going to make this work, and number two, and much more importantly, I ended up meeting my current partner, Dave. Has been such a mentor for me, and I really learned a new way of looking at things. And before I start talking about that way of looking at things, though, let's talk about first why looking at trade setups in that way that I just described typically does not work out. Okay, so if you think about it, most of us are looking for some rule-based type of setup, and if this happens and then this indicator does that, and then that oscillator over there is pointing up, or whatever it is, then you have a trade. And to be clear, there's nothing inherently wrong with that approach. I mean, having a foundation of solid rule-based setups is just fine. It's just how most of us go about it that's the issue, which I'm going to talk about in just a minute. So back to the trade setup problem here. What is the problem? Well, for an approach like that to work, the market has to be in agreement. In other words, conditions have to be right. So for example, think about if you look at these images, think about if you're driving. Road conditions are going to dictate your driving style. So if you go flying down a highway at 75 miles an hour in the sun on a dry highway, you're going to be fine. But if you try to do that on a snow-covered road, obviously you're going to end up in a ditch. And it's the same thing. It's the same thing in the markets. Let's say you have a trend-based setup or a momentum-based setup, for example. That's great. Those can be awesome trades, and those trades are going to work out great when the market is in what we call a vertical phase, or when the market's trending, or in a breakout type of a situation. But what happens when the market's in consolidation and you try to take a breakout trade or a momentum trade or a trend-based trade? Well, obviously you're going to get your head ripped off, okay? Or maybe you are a fade or reversal type trader, or have that type of a setup. Those work great in consolidating or horizontal markets, but you're going to get killed when the market starts trending. Okay, does that make sense? Different conditions require different strategies. So let's talk about, on the flip side, how we teach this. And in working with myself, and working with many successful traders, and knowing many successful traders, in working with many traders that became successful, and so forth, I can tell you that this is virtually how all of them look at trade setups. What we call it is context first, then trade setup. So rather than having a trade setup appear on your chart, taking the trade and just hoping that the market's in alignment with that type of a trade, Instead, we try to flip that idea on its head. We start by making sense of the market first, by putting the market into context. And then, and only then, do we then look to fit a trade setup into that market context. Okay, so let me give you a quick example just to think about. Let's say the market's breaking out, and it's not based on just a hunch or what you think is going to happen, but the evidence that we teach and so forth is actually showing you that the market's in a breakout type of a phase. Well, then what you would obviously look to do is to apply some kind of a momentum-based trade setup, and it might be one of the setups that we teach. It might be a setup you already have in your arsenal. That's not the point. The key point here is that what you're doing is you're applying that particular trade setup to the condition first of the market, okay? Context of the market first, then trade setup. If you think about it, conversely, let's say the market's in a consolidating phase. It's choppy. And again, the evidence that we teach is supporting that view. You would then look to apply a reactionary type trade setup, a fade or a reversal type of a trade setup, or just stand aside and wait till one side takes over. Whatever the case, the key is that you're putting the market in context first and then applying a trade setup to it. You're not just throwing darts. You're not just taking the trades as they pop up on your chart blindly. You're taking it as a reaction to the condition of the market right now. Does that make sense? Do you get that idea? Do you see the power of that idea? I really hope so, because I assure you this can make all the difference in the world when it comes to your trading. So, in conclusion, I really hope this made sense. If it doesn't, I hope you'll take another couple minutes to watch this again, because again, I really think this concept is that important. With that said, what I'll do is in the next video that I do, I'm going to get into some specific strategies for using the DayTradeTheMarkets software for trade entry, talk about different concepts and actual techniques that you can use for trade entry. So I hope you'll watch that as well. And then after that, I'll talk about some different trade exit strategies, which is obviously really powerful stuff as well. So, all right, I'll see you in the next video. But for now, don't hesitate by any means to send us any questions, comments, thoughts, whatever the case may be. We would love to hear from you. We'll get back to you pretty quickly in most cases. So, all right, thanks, and we certainly hope to hear from you soon. Talk to you later.